I think there's a space for lots of folks to keep coming in. And there are a lot of smart people out in the world, both in this industry and outside this industry. I think it's a mistake for outsiders to think insurance people aren't smart and that they're going to win just because they're not of that ilk. And there's
Yeah.
lots of smart people in insurance. I also think it's a mistake to say we already know everything. There's lots of innovation that needs to happen. You're not going to be able to escape the laws of economics any more than you're able to escape the laws of physics. So you're going to have to know how to underwrite. But there's no reason to think that there aren't lots of smart people all over that can make and invent material new things for this industry. Hi, I'm Alex Timm, co-founder and CEO of Root Insurance, and this is the future of insurance.
Alex, it is honestly an honor to get to sit down with you. I've wanted to have you on the show for a while. Mutual friend Isaac Espinoza can attest to that. I've asked many, many times, but here we are. So thank you for making some time for me.
Thank you for having me.
I would love to just hear kind of in your words, like several years on, you guys are 5 years, it starts 10 years, I mean, since you started the company.
Yeah, believe it or not, it's been 10 years. We founded the company March 14th of 2015, so 3.1415. So it's hard
Okay.
to forget.
So like what sparked you to do that? I know you are an insurance person, which was rare for a lot of insurtech founders at the time, but like what was the idea behind it, and kinda how has it gone? Like where are you today versus that initial vision for what you were planning to build?
Yeah, I mean, you're right. In my background, I'm an actuary by training. I love math. Always loved math. I grew up in the industry. My father was a insurance entrepreneur. Actually, still is an insurance entrepreneur.
Okay.
So it's really been in my blood. And I was working at a really large insurance carrier, and in corporate strategy. And there, my job was to really look at, where are customers going, and where is technology going? How's that changing?
Hmm.
And then what should we do about it? And very quickly, there was two things that were really, really evident. One was customer expectations were continuing to surpass really where the industry was. You
Yeah.
had one-click ordering on Amazon, right? And then you had an industry bragging about it taking 15 minutes to purchase a product online that nobody even wanted to buy in the first place.
Yeah.
Like I've always say, I've never met anybody who wakes up in the morning excited to go buy car insurance. And so, the customer experience was just really lacking. And then the second thing that was happening, which I was just really passionate about, was the whole advent of big data, machine learning, now, AI algorithms, were just starting to really come into focus. And so with the proliferation of sensor data in smartphones, customers are walking around with supercomputers in their pockets.
Yeah.
And for a variety of reasons, mostly because, I think one of the core things we do as an industry is match price to risk. And it's a huge value add in the industry. For a variety of reasons, that ability to collect more data and then create new algorithms that weren't based on sort of like generalized linear modeling was really powerful. And
Yeah.
so from there, that's really where the idea came from, is let's create a company that meets customers where they are on the mobile phone, that can create delightful customer experiences. And by doing business that way, we can collect more data that allows us to more accurately price risk. Mobile telematics wasn't really a thing at the time.
Yeah.
So people didn't really think you could do this with a smartphone. And that was really the big bet, the big idea. And that was in 2015. And we started the company, and you asked, how did it compare? Well, that first product was pretty much what I just explained to you.
Yeah.
And so there, we found product market fit pretty quickly and started to grow really fast. Of course, it's been a journey, really hard times, really, I don't, and really good times. And
Yeah.
I think that's probably the typical plight of the entrepreneur. So yeah, I'd say where we are today, we're really proud, we're profitable, we're big, we're growing, and so it feels great. But it's certainly been quite the journey to get here.
Yeah, and progression's never like a straight up path. The thing wobbles quite a bit. So you did this when, I mean, people have to remember what their phone was like in 2015. Most of the telematics, if not all, was like it was a dongle, or you had to
Mhm.
plug in the into the port in your car. But it was still like it was a very dumbed down kind of thing. You were trying to do something that was more, I mean, honestly, still what people are talking about trying to do now, some of the car companies like Tesla has talked about, is like more responsive in close-ish to real time how you're actually driving, maybe monthly, like how did you actually drive and how do we price you given that? Which I can understand as an actuary, that's like nirvana is like, how do you actually
Absolutely.
pull in the, because we use proxies. We don't use the actual exposure. We use proxies for it that sort of guess and sort of correlate, but not exactly. So I can understand like the passion for wanting to get something that actually was aligned to what the exposure is and used new tech. But yeah, really early days to do something like that. Where are you at today? Is that telematics real-time kind of view still the core of the product? What kind of shifts have you guys gone through?
Yeah, I mean, we still telematics is still a huge strength of the company. We believe, we have really the most predictive algorithm out there when it comes to telematics. We've fully in-housed all of the technology, which is
Oh,
incredibly important because we like to control how all of the raw data is collected off of the phone, how we actually turn that into then, insights as to what's physically happening in the car.
yeah,
And then ultimately tie that back to claims data so that we're creating this closed loop, which is incredibly important when it comes to sort of predictive analytics,
yeah,
to have sort of that ground truth and that you are operating in a closed system. And so that's allowed us to continue to rapidly evolve our pricing segmentation on telematics. And that's gone really, really well for us. So we just launched our new version of our UBI model, usage-based insurance is what
yeah,
we call it. And we're going to keep doing that every year. So it's still a huge part of who we are, but it's not. That's not where we stop. We look
yeah,
at telematics as one piece of our technology advantage and just one piece of our pricing advantage. We've also got basically, if you look at Root, because we control all of our technology, we also create really seamless and easy customer experiences. And so, that's allowed us to do things like embed insurance experiences directly in the purchase of a vehicle,
yeah,
like we do through Carvana. And so, we certainly have other tech advantages beyond just telematics. We've really created a system as well on pricing that allows us to, not even just with telematics data, but to ingest all sorts of other raw report data, raw data, and consistently refine all of our models and our algorithms. And so,
yeah,
it's going well. It's still a huge part of who we are, telematics, but it's certainly not everything we are.
yeah. So your Carvana partnership, you wouldn't have known this, but like I talk about that as one of the examples of where I think the auto like industry and insurance riding along with it is going. And you had this quote where you're like, this is absolutely how insurance is going to be sold in the future. This is at a time where like before AI was a buzzword, embedded was the buzzword. It was like all people talked about at ITC and otherwise.
Mhm.
But other than like these small kind of micro insurance or limited time products like travel or something, you didn't see like the major lines getting embedded. And then this was a standout where it's like, no, actually, this is happening. Carvana's talking about it as impacting their business. You're talking about it as where it's going. So I was like, pay attention. But I do think it's one of these moments where, like you said, no one's waking up to buy insurance. They might wake up excited to go buy that new car today, but then we get in the way of them succeeding in that. And I know Carvana was having an issue with completing the transaction because the insurance wasn't in place when they were delivering the car. You kind of solve for that by being part of their checkout flow. I I guess I'm at a loss why that hasn't caught on more broadly across the industry? Like, what's different from your experience with Carvana that might be holding back more of the new car purchase with, whatever name your brand? They've all tried to do some things and have set up agencies and whatnot, but it felt like the Carvana one was the first like more scale to the success of it. Is there something different in maybe it's the used car, maybe it's the more digital process to their business, but something that you saw that made that more successful?
I mean, really, it's the customer experience. And so it's the ability to create a three-click purchase experience and just have the insurance directly with the vehicle.
Yeah.
And to do that, you really have to be, you look at Root and basically our tech stack is a series of APIs. And so, if you're a partner, it can, within a couple of weeks, you can actually integrate, a quote flow entirely inside of another experience and truly embed it. A lot of the stuff that has been branded embedded insurance hasn't been able to do that for a variety of reasons.
Yeah.
One has been the technology of carriers is very dated, very old. A lot of it is outsourced to companies like Guidewire. And so the ability to even differentiate yourself based on a quoting platform or a quoting engine, and the ability to sort of ingest data that might not be structured exactly the same way because it was entered in through a different purchase flow, like when you're purchasing a vehicle, really hard.
Yeah.
Really hard. And then to do that actually on someone else's property and in a modern, seamless manner has also been really hard. So most of what you've seen is really like they kind of put ad tiles in certain places and they call it
Mhm.
embedded insurance. And it's not, it's really affiliate marketing.
Yeah.
And that's much tougher for the customer because now I'm excited, I'm buying this car, I get an ad, I click on the ad, 20 minutes later, maybe I make it through, and then I've got to navigate back to the site. It's
Yeah.
super, super clunky.
Yeah.
And so what you've got to be able to do is to just be really flexible with your underwriting system and embed that inside of other flows. It helps too that Carvana is a tech company as well.
Yeah.
So they certainly understand how to create these flows as well. And so you've got to find that right marriage and that right partner in order to make it work. But it really comes down to that to that customer experience. It's super hard to do as an agency too, because as an
Yeah.
agency now you're yet another layer, right? And so we've seen some of that fail before too, where agents have tried to create embedded insurance, and that's been really
Yeah.
difficult. So I think you got to be a carrier to do it as well. And there's not a lot of tech companies that also happen to own an insurance carrier, and
Yeah.
that's really what you need in order to make it work.
Do you think the car companies, I mean, they in different incarnations, they've taken some stabs at selling insurance, setting up their own carrier, MGA, agency model. Do you
Mhm.
think that that's a path forward that will gain traction here, or do you think it will still be an insurance company plus the OEM or the car seller?
I think what's going to happen as the technology in vehicles continues to progress is it's going to become increasingly important to actually be embedded directly with vehicles
Yeah.
when you're selling the insurance product. You can imagine with autonomy, you can imagine, a world where sometimes it's personal liability, sometimes it's product liability. How are you going to know which one it is when a car gets into an accident, what was going on in that car,
Yeah.
if you're not embedded in the car? And so I think what's going to continue to happen is you're going to continue to see the spaces become closer together. I don't think you're going to see a lot of success of automotive companies building insurance companies. We've seen some enter into the space, lose a lot of money.
Yeah.
And it's heavily regulated, it's capital intensive. You need a lot of data to understand how do you actually price the product and handle claims. And so I think what will happen is you'll see them, because that's not an OEM's core competency. You'll see them find folks who it is their core competency, partner, and I think
Yeah.
that's going to be the winning formula. And that's really where we're leaning.
Yeah. I got into a debate with someone about Tesla insurance in particular, and I don't think it's viable for one basic reason that there's way too homogeneity in the product and the buyer or the driver. And that generally doesn't work with insurance. You need some variability. So you need a broader product range and you need a broader kind of population of drivers to start to not like smoothing all the losses out and that lets you price poorly. You still need to price accurately and get down to the individual unit of risk. But to do that when everyone is more or less the same socioeconomically, behaviorally, and you have such a limited product base and the supply chain constraints that come with that, you're carrying a lot of risk on the repair side that what if Tesla can't get whatever part across their whole line? Every single physical damage claim you have is now impacted in the same, like that doesn't work with the idea of insurance to me. But um, now they're not going to be selling cars anymore at some point. They've announced that.
Who
So maybe
knows?
it's all irrelevant.
Yeah.
Um,
And I think you've seen really high loss ratios from a lot of that business. And so
yeah.
you've got to have it's again, it's a learning to underwrite insurance, as we've seen profitably and
Yeah.
grow and still have a good price. It is not for the faint of heart. And it's not something that you can sort of just tack onto an existing business. It's a real industry for a reason.
Yeah.
I think that that's important.
Well, I want to pick on a couple of things you just said that going back to like you coming from the industry and you're one of the rare breed when I say like everyone gets into the industry by accident unless like their parents were agents or something like that. You're one of them. So you're proving my point that like it does happen, but it takes, the parent was in the industry first. Um, you weren't an outsider kind of throwing rocks at insurance and insurance people being like, oh, they're all idiots. We can do better. It is really hard. It's really hard to underwrite profitably. It's also hard, even if you're going to be profitable through that initial growth phase with a small book. Well, as you're starting out, it's very hard to be profitable anyway. You guys went through all that. You also went public when you were still, I think, still early in that trajectory. And I said the same thing to Rick McCaffron when I had him on. I kind of put him on the spot with that. But I think all of if I include Lemonade in that, like the three who went public around the same time, started around the same time, I think you all went public too soon. And it's been really cool to watch as you progress, like where you guys have gotten to. I think you're the first of the three to be profitable. Hippo's at that point. Um, it was hard as a like a lover of innovation in the space and watching insurance people try to make a go of this to also see like the shade being thrown. When I was like, it's just because it's too early that it's not ready for that kind of scrutiny. And I don't mean the public market scrutiny, I mean the public scrutiny. Um, is that when you talk about, the ups and downs and like, what was your sense going through that it's like, no, this will work. It's just not at that point yet where we can fully demonstrate that financially as you're doing now. Like, did you still have that conviction? I imagine that must have been incredibly difficult when sort of everyone's piling on and lumping the three of you together, even though they're actually incredibly different businesses.
Yeah, I mean, it was definite. It was well, first, it was difficult. Absolutely, I think that was some of the hardest years of my life,
Yeah.
and certainly of Root's journey. For us, when we IPO'd, this was before all of the massive inflation that we saw in 2021.
Mhm.
So, actually, in, our first quarter out, the first quarter of 2021, we were doing pretty well. We thought we were well on our path to profit. We were hitting our target loss ratios and a lot of this on our more recent underwriting models and pricing models. You look at the history of the company, actually, you take a big step back, basically from launching the company to like IPO, if you correct for COVID, it was bumpy, but we got like 3 points out of the loss ratio every quarter.
Yeah.
And sort of what was
That's
happening there is we
excellent.
were collecting data, retraining our models, and then getting better at pricing.
Yeah.
And that would then allow us to grow faster and do it with a better unit economics. And so we were continuing that. And then something happened in 2021 in the second quarter that was really almost unrecorded, which was, we saw used car prices go up 30% in like 60 days.
Yeah. More than
Uh,
new cars in a lot of cases.
yes,
Yeah.
yes.
Ridiculous.
And so then we saw this huge issue with the supply chain. And what that did is that took us from, a loss ratio in the 70s up into the 90s. And we had to come out and basically say, hey guys, this was very early. We were able to detect the trend very early because of our technology.
Yeah.
But we had to go out and say, we're not going to keep growing. We think there's a real inflation problem here, and we are going to actually pull back on growth, cut fixed expenses 50% in the business, and get back to where we were on loss ratios so that we can get back on our profitability track. And
Yeah.
yet, a lot of people didn't believe us. We were public for all of 6 months, so I had just met these investors, a lot of
Yeah.
them, which was super hard. Um, and they didn't believe us. But we put our noses down. We believed in ourselves. We believed in our vision. We knew we could do it. We had the advantage of looking at, our internal data to know we could do it.
Yeah.
And that's what we did. We just went to work. And, to be honest, looking back now, that period of time made us a better company permanently.
Hmm.
You look at our loss ratio today, we still have an advantage in the market. You look at where it was in 2024, it's one of the best of anybody,
Yeah.
including the incumbents. We're more disciplined. We know how to grow the business in a very efficient manner now. And we don't listen to all the noise nearly
Yeah.
like we used to.
Yeah.
We focus on our customer, we focus on our product, and we're never, you're not going to hear from us. We might have our head in the clouds, but our feet are going to always be on the ground. And so it made us just a forever better company. And so it was really hard to go through something like that. But, looking back, I do think these are the kind of periods where you end up creating really valuable companies because it's those hard times that you learn so much in.
Yeah. Um, for people who don't know, only one of the top 10 auto writers has been profitable over the last decade in auto. So what you're talking about is no small feat. And cutting 3 points from the loss ratio, what did you say, every year?
Every
Uh,
quarter, we were doing that about
every
every quarter.
quarter. That compounds. I've talked to carriers who are like, oh, cutting 5 points, that's not that great. And I was like, I was a chief claims officer. I always say if my CEO called me, it's like, Brian, you got to find 5 points in loss ratio. Other than not paying valid claims, I have no tools to do that. So you're doing that through data and that feedback loop and getting ahead of these problems. I do remember the doubt and the shade that was thrown when you guys pull back on marketing spend and it was more like, oh no, it's just the business isn't working and they're just trying to hide. It's like, no, these are tough underwriting led decisions about how to build a profitable insurer. But yeah, 6 months in, who's going to believe that? But very happy to see where you're at today and that was proven out. And that you guys stuck with it because it is really tough. Um, where's everything going? And at your public company, so I'm not asking about you specifically. Like, tell us your whole business plan for the next several years. Now, where do you see as an industry? You guys have two major things that have gotten a lot of hype that I think a lot of the market is still struggling with: UBI and embedded. Is that where things are headed? Is AI changing everything? Is the level of inbuilt connectivity in the cars gonna pull the power away from the carrier? This is one of the things I was saying is like the OEMs need to sell that connected suite, which then means like, well, where are you in the equation if you need the connected data? And is the phone good enough to track that? Or I don't know, there's so many things swirling around. Kind of where do you see things playing out over the next several years?
I think the world's going to keep changing and consumers are going to keep changing and demanding more. And that's going to mean we're going to be, we're going to have to build better customer experiences and better prices. And, I think you touched on a few things that are going to be really important. Embedded customer experiences are better.
Yeah.
We spend more, I believe, more than any single product in the United States, auto insurance is marketed. And it's a government mandated product.
Yeah.
And you're still seeing this arms race. And who's paying for it? Well, the customers are.
Yeah.
And nobody's sitting there saying, oh, I just love watching more advertisements, right? And so that doesn't work long term. And so long term, I believe customers get what they want. And what they want is a seamless and easy experience. What they want is to buy that car. And that's going to keep happening. I think in terms of data, it's going to keep proliferating. Vehicles are going to get smarter. Vehicle technology is going to continue to change. Behavioral data is going to become increasingly available. And the ability to ingest that data and then quickly reflect that in your underwriting and your customer experiences and your pricing is going to be absolutely critical to the future. AI, I would argue like this industry is ripe for the application of AI, and maybe not in necessarily just LLMs, but in a lot of the underlying technology in terms of how we actually predict losses. This is a predictive science game, and so
Yeah.
all of the new techniques that are being developed right now, whether it's transformers or what have you, those are certainly going to impact us in a big way. And I think what we're going to have to keep doing is continuing to invest inside of our technology stacks, or we're not going to be able to actually deploy those kind of algorithms live in the real world. And
Yeah.
that's how things I think are going to change in auto.
Um, I had a weird question for you to end things on, because why not? Um, so, I have mentioned a few times, like you're an insurance guy, you're an actuary. Is there a place for non-insurance people still that like the dinosaur hunting is I think largely done, but do you think there's still a place for outsiders to come in and I don't want to say disrupt, but add totally new thinking to the industry? And can that work? Or does the need to be just like at your heart a good underwriter too strong for an outsider to be able to succeed? I'll start with that one. Do you think there's a space for the non-insurance talent to keep coming in?
Well, absolutely. I think there's a space for lots of folks to keep coming in. I think diversity of thought, diversity of background is incredibly important. And there are a lot of smart people out in the world, right? Both in this industry and outside this industry. I think it's a mistake for outsiders to think insurance people aren't smart and that they're going to win just because they're not of that ilk. There's
Yeah.
lots of smart people in insurance. I also think it's a mistake to say we already know everything
Yeah.
and we're good. There's lots of innovation that needs to happen. Our team at Root is incredibly diverse. Now, listen, you're not going to be able to escape the laws of the economy or economics any more than you're able to escape the laws of physics. So you're going to have to know how to underwrite, and you're going to have to understand the actuarial science and underwriting behind the business. But there's no reason to think that there aren't lots of smart people all over that probably can make and invent material new things for this industry. And I think that's going to keep happening.
Yeah. I agree. I the other part of it was we had this rash of startups come in yourselves, mentioned Hippo, mentioned Steve Lekis, so get Branch, others who have come along that and then things quieted down, investment pulled back. Obviously, COVID was thrown in the mix there. Do you think we're going to see another period like, the sort of 2015 to 2020-ish timeframe where there is a creation of you know, new startups and startup insurers that get to some scale? Because a lot of what we're seeing now are great ideas, but more kind of point specific. Like they're solving for, I don't want to say a niche, but a smaller line or a different space than like the bread and butter auto and home. And we're not even seeing like life insurers. There was this rash of term life startups for a while, and a couple of them don't exist anymore, and one of them's still going pretty strong. But yeah, I'm just curious, was that like a unique period in time, or do you think we'll continue to have moments where there's a sort of rash of innovation at scale?
Well, first, I think that was a unique period in time just with extremely low interest rates and lots of venture capital pouring
Mm,
into a system. And so I think in general, in terms of times to start a business and raise money, that was really a great time.
yeah,
And did it create bubbles? Absolutely. And will those bubbles burst and then show up other places? Absolutely. And at some point, that will come back. People will be irrationally exuberant at some point again. And then, the tide will go back out and, you'll see who's swimming naked. That's going to keep going. I think that that's a fairly repeatable pattern. Right now, I don't see that happening in the near term. I think
yeah,
that was a pretty extreme environment with negative real interest rates, and I don't think you're going to see something like that return in the near
yeah,
term.
yeah, fair enough. I threw you a couple questions that I definitely did not give you any sort of warning on, and I
Totally
appreciate
fine.
you taking them. But Alex, it's great to get some time and
Yeah.
sit down with you. And congratulations, because it is it's not an easy thing to continue on where the downs hit pretty hard and the ups are great, but um, you have stuck through it, and it's great to see where you guys are at right now. And I wish you nothing but success.
Thank you. I appreciate
So
it.
yeah,
Thanks for the
thank
time
you.
and inviting us.